What's going on, guys? In this video, we're going to be talking about patterns a little bit. We're not going to go too in depth because we're going to teach you more about patterns later. So if there's anything about patterns you're confused about, don't worry. We're going to teach a whole wide variety of them so that you learn them properly. In this video, what I'm going to explain to you is when you use a pattern, when you trust a pattern, when to take action, okay? So from the previous videos, things might look a little bit different on my chart. That's okay. I will cover this eventually too. All you really have to know about why my chart looks different, you can see these dotted lines in here. This is a part of our custom standard deviation channel. The ones I've shown you in previous videos was me helping you build it so you could use it for free. This is the custom coded one that I use and that we built for boiler room trading students. Now this one is it's pretty much the same thing. It's just downtrending when it's red and it's uptrending when it's green. And then we have some additional plots in here, which are these dotted lines, which are pretty much the same thing as the solid lines. They're just a little bit different, okay? So that being said, don't worry too much about that. Let's get into the video where we should be going with this. And that is, remember that everything in the market works on a low to high function. High to low, buy low, sell high. You've heard that many times. That's exactly what it is. So when a stock is coming from the low point up and it creates a bull flag, as you can see here, that's when we trust it and we go long. When the markets get into the high points and they start to create bull flags, this is where we don't trust it and we just let the market do whatever it wants, but we don't take action on it. Very similar to back here where we had a move up and then we kind of flagged out. We tried to break, and this actually was like the coronavirus pandemic, and then it crashed. But regardless, it's just kind of a good example for learning purposes, okay? I want to go give you guys a few more examples, and then we'll touch a little bit more on this. What we're going to do is we're going to look at Roku on like a 1 minute chart here, okay? So if you look at a 1 minute chart, it doesn't matter the time frame. It's the same concept regardless of the time frame. If we're looking at a 1 minute chart, you are looking at a 1 minute market. If you're looking at a 5 minute chart, it's a 5 minute market. A 20-day chart is a 20-day market. 180 days is a 180-day market. 3 years is a 3-year market, okay? So whatever is occurring on that specific time frame is how you will play. So you will notice that on the 1 minute time frame from yesterday's trading action on Roku, we had a bullish pennant occur right at the white line, and then we kind of went up. So I can wholeheartedly tell you that 90% of the time you will notice consolidation and bull flags and bear flags and things like that occur at the white line, okay? They very rarely will occur at the red or be, trustworthy or work properly around the red because reds are reversal points, okay? So think back if you traded for maybe a year or something like that, or you just started and you've seen bull flags, right? And they've gone up, right? And you've been trading it and all of a sudden they do that and they drop out and you're like, why did it do that? It's probably because you were buying a bull flag or what appeared to be a bull flag as it was trading in the red zone. And then it just rolls over and drops out because red is a reversal point. Bear flag, you were trying to short the stock market or short a stock and then it reversed on you. Shorting on the red. If you were trading a bull flag that was occurring under the white, which is the trend, and then it breaks up through the trend into the higher selling cycle, you will win. Okay? So know that most of the consolidation, bull flags, and things like that you want to trade are going to take place around the white line. But we only respect it if the move has come from below the white up into it, right? So the good example I'll show you here is even on, say, like silver, just from yesterday's intraday chart, okay? Ready? So we come from the low risk buy side, we create a little bull move, we get to where? The white line, and we create a bull flag. And then we break up. We get to the yellow, look what we do. We create what was kind of like a bull flag, and it just doesn't work, and it just kind of goes sideways, okay? We could do this all day on stocks, right? We could go look at, let's say if Netflix had something, okay? Well, you will notice what? It's an ugly chart, but it got to the red, it reversed. It got to the red, it reversed. It got to the red, it reversed. Then we went up to the white, and then we did some sort of consolidation move that went up. Now, it was ugly looking, but there was a move there, and it occurred at the white line, all right? We can go look at, let's see if NVIDIA did anything yesterday, okay? So NVIDIA really just kind of bounced around, not the best example. We go look at BABA, see what BABA did yesterday. Okay, BABA, again, really didn't do anything of the nature we would have needed to. I mean, you could argue it right here. Okay, here's a good example of a bear flag. Okay, we had a down move from the yellow into the white. We then bounced back, we retraced, and then we did what? We created a bear flag just below the trend that went back down and below that trend, and then we ended up reversing, okay? So it's about how the move starts and where it's forming at. So the key takeaway from this video is always understand that the market works on a high-low function, and we look for bull flags when the market has come from the low buying cycle, so in between the yellow and the white, or from like the red and yellow up to the white, okay? So we only look for bull flags if in the event the market has done something like this, come from down here and it's flagging below the yellow, or come from down here and it's flagging below the white. That's when we're going to try to trade those bull flags, okay? Same thing, vice versa. We'll look for a bearish move if we come from down and then we're kind of flagging like that, or if we come down and we're flagging like that, okay? Always a high-low function. If you're going to trade a bull flag, make sure it came from the low pressing up, because that means it gained momentum from the low, and then, right? So we gain momentum from the low, and then the market, and when I say the market, think about the market. We gain momentum, we get back to the white line, statistical average trend. We flag below, and we are breaking out of the trend, shifting the momentum to the upside and throwing it into the overbought or the selling cycle. Now, you might question, why does it do something like that? It does something like that because that's what the market wants it to do. The market needs to be ever moving. The market makes a lot of money. People make a lot of money. People lose a lot of money. The market needs to continuously be moving, so it's continuously active, so people like you and me continue to trade, and people like you and me continue to invest, so banks like JP Morgan and people like the United States government and the SEC and the regulations and all the companies make all their fees and all their monies and all their billions and all their trillions, because this, ladies and gentlemen, is a game with tons of money going around. And if you think that they're not going to do everything and anything to keep this market moving, not today, not tomorrow, but for forever, you're insane. There is too much money to be made to think that this wheel is not going to keep turning. So it is in the best interest of not only you, not only me, not only banks, not only governments, not only corrupt politicians, not only the SEC, but literally everybody has its best interest to make sure the stock market keeps moving. So that, ladies and gentlemen, is another piece to why you will see markets go from lows and then go to highs and then break out and then drop back down and then go back up. Because a consistently moving market means money is moving, and that's a good thing, okay? So markets do what they want them to do, okay? It's like a self-fulfilling prophecy, okay? When markets gain momentum from the bottom, they get to the white line, the market will try and cross the white line and push that market into the overbought scenario and create a full cycling move. Know that a full cycle move is from low to high, okay? And the stock market does it all the time. This is another way that I teach people. We're just gonna look at forward slash. These are the futures. We're looking at something different here. But what I wanna show you guys is if I were just to kind of zoom out like this, okay? Or maybe we do like we'll do like a 10-day, 30-minute chart. If I show you the market like this is 10 days, 30 minutes. If I were to show it to you like this, the market never stops. Don't worry about when people go to sleep or when the market closes. The market's it's never stopping. It's always going. Look at this. It's just trending up and down constantly. That's all it does. Just go. And then in between those bigger waves are just aggressive ups, downs, ups, downs, ups, downs, right? So think about that. Look at this is the wave. This is the cycle, okay, on a 10-day chart. That's the cycle, ready? And then in between that cycle, we have intraday cycles that are like this, okay? So you can see there's cycles all over the place. You will cycle in a bigger time frame, right? Or you'll cycle a bunch of these small ones in a bigger time frame, etc. Okay, so it's just one big flowing motion. It never really stops. And it all depends on what time frame you're looking at, right? Because then that is the market you're participating in, okay? So that being said, just remember that the markets work on a low to high fashion, and we buy the bull flags after they've come from the low and they're starting their moves. We don't look to buy the bull flags as they're reaching highs. Those aren't breakouts, ladies and gentlemen. So with that being said, that's all we have for you in this video. And a couple more of the my strategy videos are along this trading style. What I really want to do is try to get a couple live videos in here for you guys, live examples of trades. And then, you know, even if in the event I can't get all the most amazing videos, live trades right away, I'll at least have some more tutorial videos where we'll go into a little bit more detail about how I use it and things that I would typically run into on any given trading day, from like trading experience that you wouldn't be able to get otherwise without trading, and try to break those down in a couple videos. And then we're going to throw in a couple live videos. And I think that should be enough to really cover this strategy section. So I hope you guys like this video so far. Hope you guys like the section so far and you're keeping up. And on the net, ladies and gentlemen, I'll see you guys on the next video.